So I just mentioned for you these deviations, right? And these deviations is really where we have a trend. There's a long-term trend that's going one direction, up or down or sideways. And then we have a temporary deviation where it goes against the stream. It goes somewhere else, right? Suddenly it goes up, which is completely against the stream. And when this happens, it's really a deviation. But if something starts to go so much against the stream, it can actually change the direction of the stream. Because what happens is that when enough people start buying something, it creates a new demand that overflows the existing supply that's available. And as that happens, all of this technology, these buying algorithms, these market makers, including ourselves, will see that this market is starting to transition, and we're going to stop providing liquidity on it until it has found a new path. And when it's found this new path, which direction it's going to go, we come back and do the same strategy, right? So there is this thing called deviations, and that is where we have a long-term, like you can see here, this market has been going down for 5 days straight, right? And every time it comes back up here, it's really a deviation, and then it goes down again, and then up again, and then again, right? So it's just like a panel. It's just unfolding. It's just buying and selling transaction that's unfolding, and then you have these temporary deviations, and then the usual business kick in and just take over, right? That is deviations. But from deviations, let's see if we can find something here. See if we can find something. How about Euro USD? So I go to 1 hour because I'm trying to find an example here. All right, here you go. Right? So here you have like a long-term trend, right? You have a long-term trend that's going down, down, down. It's doing this since May 4th until May 30th. So that's like almost an entire month, right? It's just going one direction. There's like clearly a big seller active. There's someone who has a huge demand to sell Euro for USD, and that's why this thing is going down. And there was clearly a lot of liquidity they needed to sell or convert. But as soon as they are finished, the market will revert to its mean, where it came from. And if there is enough demand, it will start to turn, and it will change from a deviation. So what you will get is that you will get these temporary moves where it goes really strong against, it goes into even the 1 hour resistance, but it's still active with selling algorithms, and it gets knocked down. But when it gets knocked down, if we see that the buying algorithms then come back online, there's still a higher demand than the supply, the algorithms shift, and we start to notice the new demand, and we go into what's called a trend transition. And this is where the trend goes from being a downtrend to start being an uptrend. And you can now see that there's like this period here where it's all gray, which means that we're really staying out of it. We shorted it here, made good money, but here we have really been staying out of it because we were not really sure what's going to happen with this. After such a long downturn, we were not really sure if this is going to continue going down or start going up. And as you can see, with time unfolding, it started going up, and you can see that the bands start being painted. And if we go into the lower time frames, you'll see that this all tracks back to the lower time frame stuff and what they do. And then you can see, it came out of nowhere, right? This is the same we saw before, shorted here, and then the 1 minute buying algorithm came, showed strength, and then it's just kind of been unfolding, and then the strength came in again, and it's just unfolding. It's just simple dynamics. It's entropy, guys. It's very simple. It's just more buyers than sellers, and then the market turns. But the beauty of it is that our algorithms pick this up. And what you don't want is that you don't want to be sitting in a trend transition with orders open, and people ask, well, what should I do if the trend changes? Well, first of all, you need to be patient, right? If you're trading into a trend transition, you're probably doing something wrong in the first place. This was a trade. It went very well, and then it came down. But then if you started to trade it here when it has a very weak trend in no direction, then you're not in a good position, and you can't do that. You need to be trading the trend when it's strong, like it is here now. This is strong, so we can trade this, but we cannot just trade something that's not strong. So it's very important that you start out by not trading the weak markets and you just do as I told you. Go with the strong markets like Euro CHF here or something else that has a really strong trend across all the time. That's your goal. And you don't need more than one market. You just need one market. That's all you need. But sometimes we have many. Sometimes there's more, multiple. But you just need one. You don't need all these different ones. You can just focus on one. It's perfectly fine. Don't be greedy. Just be patient. Okay. So I just want to explain this because a lot of people keep asking about it. If I had my 1 minute filled and I then get my 5 minute filled and then the 15 minute and the 1 hour stops being green and I was supposed to buy them to get out of these positions up here, they're no longer accessible because the strength is so low. So I'm not going to buy, I'm not going to put more risk on, okay? Because the strength, it's not the strategy anymore. We already fucked up by trading the wrong market using something with weak strength. Because if you're trading a market with strong strength, you're not going to get into these problems, okay? By the time that the market comes down to your 1 hour, it will still have a lot of strength to produce the bounce you need. But if you chose a bad market, the wrong market, then there will be no strength to produce that bounce, and you'll just have to hope that you get out of these trades. But what you're gonna do is that you have the 1 minute and you have the 5 minute trades open, and you don't have any 5 minute or all right, so it looks like this, and you were supposed to have trades here, but you removed them because there's no strength on the 15 minute and the 1 hour anymore, and the price is trading like this, okay? It's trading down here. So this is in drawdown, this is in drawdown, and you're wondering, does this strategy even work or whatever? Again, you traded up, you didn't trade the strongest market you could find. That was your first mistake. But what you're supposed to do here is really just take these trades, like I showed you earlier, the 1 minute and the 5 minute bands, and you just put them at break even, okay? So you just drag this slightly up, and if it's short, you drag it down instead. It's to take profit, right? So you move this just slightly up, right? And you just want it just above where you entered, or maybe even exactly on the line. You just want to get out of these trades at break even, because when the price is down here, it's very possible you will see it do all kind of weird stuff, like this. It's very possible. It's also possible it takes your stop loss. And if it takes your stop loss, it's okay, because this is 3% risk, okay? And this is not gonna happen to you often, that you will lose trades. Like this will only happen to you in the beginning when you're still learning about what you need to do and which trades you need to trade, okay? So worst case, if this happens to you and you don't have strength on 15 minute, 1 hour, it's that you're gonna lose 3% when it takes your stop out. But you have a very good chance still to get out these trades at break even. Just leave them and be patient. Now, if this market starts to turn, if this really starts to go down a lot, and let's say that it spends a long time down here, and the 1 minute is, the 1 minute band is now red, the 5 minute band is red, and there's no strength on the 1 hour or the 15 minute, you can start to think about building short positions on these bands in the opposite direction. So that means when it's down here and it's staying a long time down here, meaning it's not really doing anything, right? Just staying here. You can start to build a 1 minute position where you short against these bounces, because the trend has already changed. I would say this is pretty advanced, but this is the direction that the bot will be going about it if it happens. But again, it shouldn't happen. Most of the times these are deviations, and the deviation so far has just proved that we need to stay patient and make sure that we stay in the trade. The stop loss doesn't get hit. It's very important that the stop loss does not get hit while the trend is still intact. Okay, this is number one key. I would love for the stop loss to even be further away than down here, and I think in the future it will be much further away. Less risk per trade, but means a little bit less money we're gonna make, but we'll be much safer. And you can start to experiment with that as well. If you're worried about the stop loss, you can totally put it further away, but this is like the minimum distance. You can put it further away if you want, but just keep in mind it's going to reduce your risk. So that's deviations, trend transitions, and being stuck in a trend transition, okay? Don't worry too much about it. Just make sure you do your homework before you take the trades, and it's not really going to happen.